Hello moneymakers, let's see today's top 5 market updates. Gold up on back of lower interest rates and grim predictions for US recovery. Gold was up on Thursday morning in Asia, continuing its rally from the previous session after Wednesday's US Federal Reserve policy meeting decided on holding the benchmark rate near zero. Most officials forecast keeping the benchmark rate near zero through 2022. Investor sentiment also soured as the Fed quarterly predictions pointed to a long road towards economic recovery from the COVID-19 virus in the US GDP, forecast to contract by 6.5% in 2020, and unemployment to fall to 9.3% in the final 3 months of the year, from May's 13.3%. Fed Chair Jerome Powell reiterated that the central bank is committed to do whatever we can for as long as it takes after the meeting. The ultra-loose monetary policy is a positive for gold is that it applies downward pressure to long-term US real yields that effectively increases the appeal of the precious metal relative to US interest-earning assets. US weekly jobless claims out at 8:30 a.m. Eastern Standard Time. Layoffs in the United States are abating, but millions who lost their jobs because of COVID-19 continue to draw unemployment benefits, suggesting the labor market could take years to heal from the pandemic, even as businesses resume hiring workers. The weekly jobless claims report from the Labor Department on Thursday, the most timely data on the economy's health, will follow news last Friday of a surprise 2.5 million increase in non-farm payrolls in May. That could reinforce views that the labor market has weathered the worst of the turbulence. The Federal Reserve signaled on Wednesday it would provide years of extraordinary support for the economy, with policymakers projecting a 9.3% unemployment rate at year-end. The unemployment rate has jumped from 3.5% in February. Oil prices drop on concerns about patchy demand recovery. Oil prices fell more than 2% on Thursday on worries about slow demand growth, with coronavirus cases rising, U.S. crude stockpiles hitting an all-time high, and the U.S. Federal Reserve projecting recovery from the pandemic would take years. U.S. crude inventories rose unexpectedly by 5.7 million barrels in the week to June 5 to 538.1 million barrels, a record, as imports were boosted by the arrival of supplies bought by refiners when Saudi Arabia flooded the market in March and April, data from the Energy Information Administration showed. At the same time, gasoline stockpiles grew more than expected to 258.7 million barrels. Distillate stockpiles, which include heating oil and diesel, rose by 1.6 million barrels, but the increase was smaller than in previous weeks. The market took a negative view on the stock build, even though there were signs of improving gasoline demand in the data. Despite pandemic, new U.S. solar capacity will grow 33% in 2020. New U.S. solar installations will increase by a third this year, a report published on Thursday showed, as soaring demand by utilities for carbon-free power more than outweighs a dramatic decline in rooftop system orders for homes and businesses due to the coronavirus pandemic. Solar accounted for 40% of new U.S. capacity additions in the first quarter, ahead of natural gas and wind. The solar industry will install 18 gigawatts this year, enough to power more than 3 million homes, according to the report by the U.S. Solar Industries Association and energy research firm Wood Mackenzie. That is 9% less than the group's forecast before the outbreak prompted construction delays, weakened consumer demand, and tightened access to financing. But utility-scale solar is on track for a record year, the report said, with 14.4 GW of new capacity expected to be installed in 2020. State renewable energy targets and solar's low cost are underpinning the sector's robust demand. New Zealand retail sales jump, but still trail pre-COVID levels. New Zealand retail spending surged in May when the nationwide lockdown was lifted, but remains well below pre-COVID levels. Purchases on credit and debit cards at retail outlets rose 78.9% from April, Statistics New Zealand said Thursday in Wellington. That follows a 47.5% drop in April and a 3.2% decline in March. However, the value of spending at NZ $5.3 billion, $3.5 billion, is 9% lower than in February. The coronavirus lockdown was lifted on May 14, breathing life into retailing outlets that, other than supermarkets and a handful of other essential stores, had been shuttered for 7 weeks. As the nation grapples with rising unemployment and a lack of international tourism, the prospects for a sustained surge in consumer spending appear dim.
Much of May's spending increase was seen in hospitality, which reported adjusted sales of NZ $640 million, up from NZ $57 million in April. Still, that spend is 41% smaller than the NZ $1.1 billion seen in February. Thank you for watching. Subscribe for regular updates, only at Capital Street FX.